Hi everyone and welcome to autoSMSF. We are already in the second half of the financial year, and this is the time when we start thinking about our tax strategies for this financial year. And one of the tax strategies that commonly came into our mind or our accountants advise us is actually contribution to your superannuation. So joining me today is Raj from autoACCOUNTING. Welcome, Raj.
Thanks, Bimal. Happy to be here. Yes, this is really good topic to discuss and learn more about it. This sounds simple sometimes, but there are some rules which you have to take into consideration so that you don't miss on claiming those deductions. So I will try today my best to explain the things in simple to make it understand our audience.
Yeah, sure.
Yeah.
And as you know, before we start, we just let you guys know we are only covering the tax part of the superannuation or super deductions. Contributing to yourself super fund or any super fund is more of the financial advice. So if you require to know whether you should contribute and how much, please contact your financial advisor for that one. But regarding the tax benefits and tax strategies, we're going to explore that today with Raj. So Raj, the first question is, how exactly it works? So how putting the money into your super can save you taxes?
Yeah. So this in general language we say how much personal super contribution you do. So whatever you put into your super considered as your personal contribution, and that you claim in your personal tax return as a deduction. And this is 100% tax deductible expense. And that so for example, if you are on a higher tax bracket where you are paying on a 37% tax one, and you made a super contribution of say $10,000, then technically it's around $3,700 of tax which you save in your personal tax. But saying that, it will go into your super fund and you pay 15% tax on that one.
Yep. Okay. So which means that 37 less 15, you still got a bit of tax savings.
Yes,
there.
That's right. Yeah.
And I think the other side of this one is the cash flow, because 3,700 you are saving in your hands, whereas 15% tax is paid in the super.
That's right. So instead of paying to the ATO, why not you boost your super fund and pay less tax there?
Yep. Yeah. Very good tax strategies.
Yep.
If that's what you are looking for. So now, does this means that what your employer is contributing, you can claim that as well in your tax?
No, that's mistake many people do. They think in that way. When we look into the super contribution, there is a cap which is currently 30,000 per year, and that is including your employer super contribution. And if you do the salary sacrifice, everything is there.
Okay, so that means that if I'm say on 100,000. At 12%, my employer is contributing 12,000 into my super. I can only contribute another 18,000.
That's right.
And I can only claim 18,000 as a tax deduction, not the 12,000.
That's right, because 12,000 is something which your employer has already claimed. So that's not your one. So you only claim what you have put from your pocket into your super fund, not what employer is putting in.
Okay. One question. Now, this personal deduction, that's a personal in your personal tax return. It's not a business. So even if you're working for someone, you can claim that. You don't have to be in a business. Am I right?
That's right. So you can, even if you are an employee or you are in a business, and it doesn't matter. Whatever you contribute, that's personal contribution. You claim in your personal tax return and you put it into your either SMSF or your industry super.
That's where I was going to come to the next one. Does the SMSF has set any different rule than the contributing to your current industry super?
No, it's the same rules applies in both cases, whether you are in the industry super or you do the super self-managed super fund SMSF. If you do personal super contribution, in both cases you need to do the intention to claim form. So that's something you have to apply by yourself, and if you are with the industry super, they will do paperwork and send it to you, which you can use at the end of the year to claim it. If you are with the self-managed super fund, your SMSF accountant will help you with that.
As you guys know, being an SMSF accountant, that's the paperwork that we do. So every time whenever a member is making extra contributions and they want to claim that one in their super fund, we still have to do intent to claim form in the SMSF as well. So as a trustee, we still required to do that form, and all the paperwork need to be in place. Thanks Raj for that. Now I also heard that it's not just doing the form, it's actually you also have to wait for super fund to notify you as well.
That's right. So sometimes it's more like not just filling the form and you think it's done, and it's do the intention to claim form, send it to your industry super, and once you get the confirmation email from them, then that's when you think it's done. Not just sending means it's done.
It's done. Yeah, exactly. Yeah, and then only you can claim that.
That's
one.
right.
And the same applies to the SMSF as well. As a trustee, as a member, you need to send and do the paperwork saying it's you got intention to claim, but as a trustee, you need to actually accept that one and say yes, you accept that contribution as a concessional contribution.
That's right.
Yep. So
that's right. So both cases rule is same.
Rules are same. Slightly different way to do it. Yep. So now the other thing very commonly now people are asking, and then they are saying carry forward concessional contribution. Can you explain a little bit on that one? What exactly carry forward concessional contribution is?
Yes. So as I said before that there is a cap every year. Each member has a cap which is currently 30,000. But it can happen that in some year your financial situation in that way that you did not put the full 30,000 into your super fund. And that means, for example, instead of 30,000, you put only 20,000, you left with 10,000 as a balance, which will carry forward to the future year.
Okay.
So next year again, say your cap is 30,000, but you do have the 10,000 from the previous year. If you want to do a tax strategy, and you can at that point, it allows you to contribute 40,000 into that fund.
So you can go above your cap.
That's right. You can go above depending on what's your balance is, and this is only possible for 5 years. There is a limit. You can't it's not carried forward for the more than 5 years, and also you have to have
your balance
of 500,000 for super balance.
Okay, so say if my current super balance is 400,000, I hold 30,000 last year, only put 20,000, and I had carry forward of 10,000 every year for last 5 years.
Yep.
Which means that's a 50,000. Plus, I've got 30,000 for this year, which means I can actually contribute up to 80,000.
That's right. Right. So it's just the 5 years. And for example, if you did not do the 80,000 in that year, the next year, your last year, which is now the 6th year, you missed that one.
Okay.
So you will left with 40,000. And because you did only 30,000 for that year, so 40,000 to be carried forward instead of 50,000.
Okay. Yep. Yeah. That makes sense.
And one thing which I think I missed saying is that a balance of 500,000, that is from the last year balance.
At 30th of June,
previous year.
That makes sense because you don't know what your balance is.
That's right.
Today, you're contributing that one. Okay. Yep. So which means that if your super balance is going up and down, so it's good to check that one whether you are eligible or not. Is it like, do you have to actually manually check, or is there a place where we can go and check?
Yeah, the best place you can simply ask your accountant.
Okay.
They can check on the ATO, they can do that one, or they can do some calculation and let you know how much you have the carry forward balance. Also, if you have your MyGov app, then you can check from there too.
Okay, yeah. And that's what happened with a lot of our members, because we are the accountant for the super funds only. So we don't have access to check what the members' balance is, or what the members, I would say, carry forward balance is. We know what the member balance is. So what we suggest them to just contact their personal accountant, or actually go to their MyGov app, just go under the info and carry forward balance super balances and see whether they are eligible, and if they are, how much they've got balance sitting there. So that's an easy way.
That's right.
That's good to know. Now this means that this is a very good strategy when it comes to, for example, if I've got a property, I'm thinking of selling investment property, and I know that I'm going to make 500,000 profit capital gain on that one, and if I have a carry forward super balance of say 100,000, I can actually reduce my tax significantly.
That's right. That's what hold the tax planning called, because when you look into what's your total balance is, you have to plan for future as well. For example, if this year you already know in 1 or 2 years you are either going to sell the property, you might, as given the example, you might have the big capital gain, or you are into a business which is a startup stage, or it will be growing in 1-2 year definitely. So you can save that carry forward balance to use in that year rather than in the year where you are already on the lower bracket. So it's very good tax planning.
Again, it's the tax wise we are talking about. Financial implications will be different, so always contact your financial advisor for that side of it. But tax wise, yes, that makes sense. Why the rules for all these super contributions that we talked about, are there any difference if it's in an industry fund or self-managed super fund?
No, the rule are same. So either it's industry or super fund, if you do the personal contribution, rules are exactly same. You have to do as we have spoken before as well, that you have to do the intention to claim form, which you have to fill in. And other thing is, if you are doing the personal super contribution, date is very crucial.
Okay.
So you have to do it before 30th of June.
Now actually coming to that point.
And now saying that when we say 30th of June, some people think that it's paying from your bank to the super account. If you pay on 29, in fact, you think you paid before 30th June, but it is you received in the super fund as well before 30th of June.
That's
if the weekend comes or public holiday comes, or if you do any transfer, something happens, then if money goes after 30th of June into the super fund, then you won't be able to claim that in that year.
Yeah, that's very good point. And I think that's where the big difference comes when you are contributing to industry fund or retail fund versus when you are contributing to SMSF.
That's right.
Because being in an SMSF, it's pretty much very straightforward, because you are transferring from your one bank account to the SMSF bank account, and you've got control. So that transaction can happen in real time or within overnight or a day or two. Whereas if it's done through a clearing house via or BPay or other ways into industry fund, that can actually take longer to a week or so.
That's right. And the intention to claim form work. That's why we accountant don't claim until we have the intention to claim form, because sometimes client thinks that they have paid from their bank account, so that means that's the contribution for this year, but your industry super fund may not have received it. So that's why intention to claim form is very important while doing the tax return.
So what's your thoughts are whether clients should actually, if they are planning to do extra contribution, what's the best time? Is it like first half of the year, second half of the year? What's the best timing?
We always say it is the second half of the year.
Okay, why so?
It is because you know how you are doing for your business, or if you are working as an employee as well, you know your income, where you are sitting. So because the situation changes, right? And on that basis, you see how much you need to contribute from the tax point of view.
Yeah, that makes sense. So unless you are doing salary sacrifice, which
you can't
from the start. But if that's not the case and you're planning to make a lump sum payment, it's better to do it
towards the end. That's right,
because you can assess better.
That's right.
That makes sense. And in your experience, what are the most common mistakes that people make when it comes to the personal contributions and the deductions for that?
Okay, the first thing is they do the contribution, but they forgot to claim the intention to claim, forgot to do the intention to claim form. That's the very common one. And there is a date for that as well, which is like you have to do it after the end of the year or before lodging your tax return. And if in case something happen, like some people are there who are late for the lodgement of their tax return, then at that point you can't do the intention to claim form. That means you missed whole claim
deductions.
That's right.
And that's very important, because we have seen that when we are doing the super fund side, we always recommend them not to lodge their personal tax return until they have processed the SMSF, just to make sure that all the paperwork is in place.
That's right.
Because if you have processed your personal tax return, or I would say if you have lodged your personal tax returns and have made some and haven't done the intention to claim form yet, unfortunately you won't be able to claim that as a personal deduction. So with SMSF as well, always talk to SMSF accountant before actually lodging your personal tax returns, so we know that everything is in place. and at the same time you have to do that one by 30th of June next year, isn't
That's
it?
right, yeah.
Whichever your tax lodgement day or 30th of June next year, whichever is first here.
Yep.
Now,
and one more thing is, which is the 30th of June date again, that they have to do the contribution before the 30th of June. That's thing which we have putting more pressure on the date thing today, and telling them that's the one thing that if it hits after, you won't be able to claim. And other mistake the people are doing it exceeding the cap.
Okay.
So without knowing, not calculating, and they're just doing it. Yeah.
I just want to mention one thing there, which we notice very much in our SMSFs are, when they're working for someone, the employer actually do the contributions after they process the pay. So their June contribution actually hits the SMSF bank account in July, because SuperStream takes a bit of time. And when they're doing the calculation, they forget about that one and they calculate it incorrectly. So be careful when you're doing that one. It's always better to be little under than over, because instead of paying extra tax. But it's the money that hits the bank account. That's very important.
So that's why we say it's always better to do a calculation before doing anything.
For discussion, it comes to is the main things when it comes to the personal deduction is making sure the dates are correct, because processing, paying everything by the date is very important.
Paperwork is must.
Paperwork is must. Yes, we know that if no paperwork done for intention to claim, no intention to claim.
Yes, so that's right.
That's right. And also making sure the caps are met. You are not over contributing. If you have a doubt anywhere, always go back to your accountant. Sit with the accountant and work out the numbers.
And if you have the self-managed super fund, just ask all questions to your SMSF accountant and get as many information you can get to, so that your super fund is clean and you know where you are going. You are not making any kind of mistake.
And I think that's where we say that don't go to the accountant when you have to just lodge the return. Go and see your accountant before that one, so we can plan better for end of financial year.
So as we say, the best timing is after April. So May is the best time when you talk to your tax accountant and your SMSF accountant.
And I think that's the reason why we decided to have this conversation at this point in time, because we are already in Feb, and now when we can start looking into our financial affairs, where we stand, which gives good enough time to actually have a conversation with your accountant on the strategies that you can use. Thanks, Raj. It was really useful and understand how exactly we can claim and reduce tax and actually use the tax towards our retirement and wealth creation side of it. Any wealth creation, one day we will invite our financial advisor for that. So we'll ask all these questions to them.
Thank you, Vima. Thanks, Vima.